Hello again, everybody. Harry Boxer, the technical trader at detectrader.com. It's Tuesday night, January the 5th. Kind of a sloppy day on Wall Street today. The indices ended mixed at the close, but many stocks did not do well. Although we do have some to talk about on the long side. We're going to show you some of the short side as well. CYTK, I like the way this has been acting. I love the wet thrust in October, November. It took it from 6.5 to 13, doubling it. And over the last 4 or 5 weeks, a nice little falling wedge near the 50. Today it snapped back 6% and with 7.27 days to cover, we could see a follow through. There is resistance right above here. I need to see how, as I said, that the market take this one above, say 10 3/4, 11, and then maybe we can get an extension that tests the 12 range, where there's a bit of a resistance right there from the high about the middle of December. But I'm looking for more than that. I think the stock can get to 13, maybe 14 on this move. So let's keep an eye on this one, like the base to break out on the falling wedge. Good setup. EARS, boy, it's been active over late. It's really run very well from about 320 all the way to over 634, doubling. You can see there's resistance up in here, but if you go back to when the stock first came public, it looks to me like this one may be making an important move in here. And drawing a line across there, the near-term target will be around the 7.5 area. If we can get through that, then we have new all-time high territory, and we have a chance of making this move a bit further up into the high single digits. FIVE took out a declining tops line with a breakaway after popping recently and consolidating for a week and a half on low volume. Today it popped as volume increase to 3.4 million. I'm looking for a move to about 36.5, followed by a move up towards 39. Then it'll tell us whether this thing's going to have more upside potential. With 5 days to cover, eventually we could see 41 or 2. First Solar has been stellar in the last month or two, and especially since the September lows in the low 40s. The stock's now 72, 30 points off the low, but up against the highs from 2014, multiple highs in this area. So we'll have to see if we can make this get a key breakout. If we do, the next target's got to be up, way up there, near the mid to high 90s, which would be quite incredible since the stocks have recently been as low as under 40. But no, I do think that it's going to have a tough time getting through here. The top of the short-term channel and lateral resistance could pull it back. Should it break through, we could get a little bit of squeeze on this one. NVDA still liking the pattern and the whole setup. Nice rising channel. It's been consolidating for a couple weeks now. A nice flag. What it does, it needs to get over the 34 range to get it going. The target's to 36.5, 39.5. 6 days to cover. This one could be interesting, but if we do get a market pullback, keep an eye on support at 32. OMED's got a really interesting pattern. On a daily chart, you can see the left shoulder ahead and the right shoulder, and the neckline around 19. The shoulder line around 19. The neckline's up here around 23.90. You get through that, and we're just underneath it. We popped $1.34, 6% today. We could see this spike, especially with 16 days to cover. My target's going to be 30. Could be a good swing trade. While the gun stocks did well today, Ruger jumped 415 or 6.75%, and Smith & Wesson jumped 258 or 11%. And both of them look like they're in runaway mode with breakaways. The pattern calls for some consolidation, perhaps in this zone right up in here. This is near the top of the long-term channel on SWHC. And Ruger, there's lateral resistance here as well. If we should get through this level, you can see them extend. Perhaps take in Ruger, for example, to the top of this channel, which would call for a move to approximately the high 70s. So this could be interesting. The Smith & Wesson's longer-term chart on a weekly basis shows that this is new all-time high territory, and we could get a stock that gets squeezed up here. I'm looking to see if there's an extension on this one. SCO looking very good. I really like the way this reversed yesterday and popped through today. It was resistance about the 137.8 zone, and we took 139 out and ran up to 140, 160, closed at 141.19, up 735. Not far from the highs for the day, and I think we're headed for 165.68, something of that nature. We shall see. SEDG, one of the strongest solars, hearing nothing but good stuff on this one. I will tell you that I'm told that some hedge funds consider the solar group to be potentially weak if the market runs down, and that they could be shorting in here. So we're going to have to be careful on anything in the solar group at this point. 1, 2, 3, 4. The fifth wave could be on the way, however, in solar edge, which could take this as high as 34 short-term rate, near-term target. 4.8 days to cover. That could help, and maybe get a fifth wave on it. SIEN today popped. Sientra, it dropped about 76 cents, at almost 13%. And you can see the left shoulder, head right shoulder, breakout in a little platform. The stock looks like it may be headed for a test of the gap. 885 short term, and then 10, 10 and a quarter, 10 and a half, something like that on the secondary target. Lastly, on the long side, we showed you Smith & Wesson. I just think that the gun manufacturers are in play right now. On the short side, taking a look at AFOP, for example. After a 1, 2, 3, and 4 wave move, it's starting to roll over again. The way this is set up now, I'm looking for a retest of the lows at 13 and a quarter, and maybe all the way down towards 11 to test the lows from 2014. That would complete the 5-wave decline. So watch for this one to drop 3 to 4 points over the next few weeks if this does fall apart. AMAG has been in the downtrends for about, I would have to say 7 or 8 months, but a perfect down channel. Multiple waves down, and yet this rising bear wedge failed at resistance and is rolling over. The way this looks to me, we could see a stock in the high teens. Keep an eye on this one. It'll move to 23 and then 17, 18. AMSG could be topping here, although it was up a little bit today. I still think that if it gets below this level, this is what you want to watch for, under 74, it starts to accelerate lower. The technicals look terrible. I think on a long-term basis, the long-term channel may have been broken too, so keep an eye on AMSG. I think the educational stocks look terrible. They have for a year. They continue to look lower. Today, APOL was down 5.5%. CPLA was down 3%. That dropped to $1.41, and that looks lower, perhaps to 40. And DeVry is looking pretty ugly as well, as this stock continues in a nasty downtrend, having gone from 49.50 range all the way down to low 20s, and yet I can see long-term a move that takes us down into the high teens, or at least in intermediate term, excuse me. A few more ideas are Cerner, which is in a distinct down channel, and after long-term uptrend, you can see how this may be broken, snap back to, there's your declining channel, broken there, snap back to, and roll over again. It appears that a broken wedge here yesterday with a breakaway gap, and inside day today could lead to lower levels that have to target somewhere around first 52.3 and then down to 48.9. CPLA we just mentioned to you. FIX is a new short, and it doesn't look as bad underlying technically, but price wise this broke and bear flagged and then broke again, and although today was a snap up 67 cents, just 2.5%, it was an inside day. It feels like it's still coming down. My target's 25.5 3/4, and then all the way down in the low 20s. GPN's another. The stock appears to have broken its channel after gapping down, unable to get back up through. The moving averages have control this one. They've crossed over. They're moving down. Any movement down below the current pattern should get us to 59 and then 55. Hasbro, the toy company, broke, snapped back to resistance, broke down, it's forming a bear wedge. Feels like a $60 stock to me. Papa John's looks pretty nasty. A upsloping head and shoulders with a key breakaway gap to the downside, a bear wedge, a retest, and now a bear flag. Nevertheless, with 1, 2, 3, and 4, I'm looking for a fifth wave down to 49, and maybe much worse to get a lousy market. Restoration Hardware also broke its massive top pattern. Came down from the bear wedge and broke that. Today it tried to rally, but it has an inside day of sorts. I think the target for me is 69.70, and then we'll see if we can get down much lower than that. And last thing is RRGB, Red Robin Gourmet, which I gave you, is a short in the 79 range. It's already dropped down to 59, even less than that. And this may very well be headed even lower. The longer term chart shows some support around 55.6, but eventually maybe we get to high 40s. And that's it for tonight, everybody. Have a good evening.